Hare Krishna. Welcome to Tax Guru YouTube channel. This is CA Rohanar, being a practicing chartered accountant based in Mumbai, also partner in Motilal and Associates LLP, member firm of Marks Network. Welcome to the video series on concurrent audit of bank branches. And today is session number 18, and we are going to discuss concurrent audit reporting. Yes, so let's dive into it. Let me allow to share my screen. Yes. So in the previous session, we discussed internal controls and compliance framework, right? So today we are perhaps moving to the most important outcome of the entire concurrent audit process. That is what? Reporting. So an audit that identifies 100 irregularities but reports them poorly creates what? Little value, or we can say no value also. So conversely, a well-structured report highlighting only what 5 to 10 critical observations can significantly improve what the risk management and governance. So concurrent audit is valuable only when observations are reported timely, clearly, objectively, and in an actionable manner. So an excellent audit report not only identifies the irregularities but also enables what management to take the corrective action and prevent recurrence. So the quality of your concurrent audit is judged not merely by the checking documents or transactions, but by how effectively you communicate, how effectively the auditor communicates its risk, weakness, and corrective actions to the branch management and controlling officers. So today's session will therefore focus on what practical reporting techniques that every concurrent auditor should what master. Let's move on further. Understand why concurrent audit reporting matters. Okay, so concurrent audit reporting serves what multiple purposes. First, it acts as an early warning system. That is the most important. Many frauds and major NPAs begin as a small irregularities, which, if reported on time, can be prevented from becoming the serious issues or losses in future. Second, reports enable what branch management and controlling officers to monitor the compliance with RBI regulations, bank policies, that is internal and internal controls also. Then third, reports support what risk-based supervision by identifying recurring operational, credit, treasury, KYC, or compliance deficiencies. And finally, concurrent audit reports often become key reference documents for statutory auditors, internal auditors, RBI inspectors, vigilance departments, and then fraud monitoring units. So hence, reporting should be viewed as what? A governance responsibility and not merely a compliance formality. Very important. Okay, how we can see our report as a governance responsibility and not a merely a compliance formality. Moving further, let's understand types of concurrent audit reports. There are various like daily reports, weekly reports, monthly reports, special reports also zonal officers can ask for, then flash reports, then fraud alert reports. So these are the basic various types of audit reports. So reporting frequency depends upon the risk profile of a particular branch, okay, and also the observations done by the auditor for that particular branch. Certain matters require immediate reporting and cannot wait for the month-end reports. So example includes suspected fraud, large unauthorized transactions, KYC violations. We need to immediately report security deficiencies, cash shortages, cyber incidents, regulatory breaches. So this requires what immediate reporting through the special or flash report. So routine operational deficiencies may be consolidated into weekly or a monthly reports. So auditor must understand that the timeliness is what important as a accuracy. So delayed reporting can result in a financial loss or regulatory penalty or reputational damage. Next, let's understand one by one daily reporting. In this, what we do, daily reporting is generally exceptional based. Okay, most of the CBS provides us the daily exceptional reports. So not every observation requires daily communication. Okay, but however, whenever an observation indicates immediate risk exposure that we need to judge, the auditor should report it without delay. For example, a cash shortage of rupees 2 lakh discovered during the verification cannot wait until month end, right? Similarly, if a loss account shows false stock statements or manipulated financial data, immediate escalation is what required. So, a good daily report should contain what? Nature of irregularity, amount involved in that, date of occurrence, potential risks, immediate action required on that particular matter. So the objective is what? Prevention of further loss of daily reporting. Then move on to the weekly report. So weekly summary may cover your KYC deficiencies, whatever you have, account opening forms you have checked during the 5 days or 6 days. Then you have to comment on that particular things if any deficiencies you have found. Then documentation gaps, as I said, overdue compliance items, account opening exceptions, operational losses, operational lapses, pending reconciliation items. So this weekly reporting acts as a bridge between what daily alerts and monthly reporting. So it helps what branch management to focus on the recurring issues before they become the significant findings, right? So example includes, as I said, account pending, KYC updation, ATM reconciliation delay, unreconciled entries, then dormant account monitoring issues and incomplete loan documentation also. So the weekly reporting promotes what? Continuous corrective action rather than end of month surprises. Now, moving further, we are coming to the monthly concurrent audit report. Okay, this is what the monthly report is, the principal reporting document of the concurrent auditor. Very important. So, senior management generally reviews this report for assessing their branch risk. So, therefore, the report should not become a lengthy compilation of a minor observation. But many branches or many banks have now a pre-formatted monthly concurrent audit report. Okay, they have a number of tabular data, means number of tabular question answers, tick, yes, no, not applicable in this way. So as a concurrent auditor, we need to fill those pre-filled audit report formats, either online or either physically or either in a soft saved copy offline, and then we have to upload on the bank's portal. So these are the now things, means many banks have a different aspect in their monthly reporting, different formats also there. So report should not become what? Lengthy compilation. Whenever you have a descriptive type, you have to shortline it in a very lucid manner, like an executive summary. So it should highlight what significant issues, prioritize the critical risks, quantify the exposure, and track unresolved observations. So management should be able to what? Understand the branch risk within a few minutes of reading the report. We will come to the is like a gist of the discussion or executive summary, as I say. So moving further, let's see ideal structure of the concurrent audit report. Yes, this is a basic like that. Cover page, executive summary, scope of the audit, risk overview, observation matrix, quantification, compliance status, and then conclusion. So professional report follows a logical structure, right? So executive summary should provide a snapshot of the branch risk, means the level of the senior level, they have don't much time to go your 70-75 page audit report. They just see the first or second page, 2 page summary where the important things you have highlighted in that particular, and they come to know what the risks are under going under branch. So that is the important thing. So executive summary is very important. It should provide a snapshot of the branch complete risk. So body of the report should present observations in a structured manner. So each observation should ideally include what? Observation, criteria violated, risk implication, amount involved, management response, and auditor recommendations. So here also many bank have come with their format where they columnar, they said what you have to see, either what is your observation, and anything wherever they necessary, they also ask for your remark as a concurrent auditor or recommendations as a concurrent auditor. So we need to also see what is asked for, whether they have asked for only to disclose or show irregularities, then we have to stick with only the irregularities. Then when they ask us for the remarks or recommendation, then we can. Then some of the bank managers also give us the one pointer where you can freelance reporting, where we can report in our way, our what we see, means whatever areas something we are not covered, under some that areas we can highlight it on that particular underhead. Means if you are not provided, then you can create one headlines that is this is the areas which is not covered specifically, but these are the highlighted points. So this is also one of the thing we need to understand. So uh, such structure reporting improves what our readability and management action also. So let's understand the executive summary and its importance, right? Gates of discussion, as I said. So many senior officers read only what executive summary, as I said. So therefore, this section should clearly communicate what went wrong, how much money is involved, how much the stake it is, how risks exist, and what action is also required. Okay. So avoid technical jargon in that particular part. So write clearly and concisely. If the branch has major deviations in the advances, KYC, or cash operations, they must appear prominently in the executive summary in a short drafting. So that need to be taken care of. Let's also understand the grading of observations. So many of the concurrent auditor where we have a freelance type of reporting there where you means that is this is the important part in that particular case. We can uh, categorize our risks so that critical, high, medium, low. But many times what happen now the number of banks, maximum bank branches have come with their pre-formatted audit report, as I said, that is a drop down, yes, no, not applicable, and like that. So many times there also no option to highlight any risk level or that category. But if feasible, we can also write one or two line. This is a medium type of rigs or a low type of rigs or high if we can. Okay. So every observation is not equally important. So grading helps what management to prioritize their corrective actions. That is the importance of this categorization of the risk. So risk-based approach ensures what focus on the matters that threaten the financial loss, fraud, regulatory actions, or reputational damage. So proper grading enhances what your report effectiveness and value. So avoid the clutter. That is main important thing. Next, let's understand critical risk observations. So critical observations require immediate attention also and from the senior management. Okay. So example includes what disbursements before sanction, missing title deed, fictitious accounts, Benami transactions, serious KYC failures means Aadhaar and PAN is not linked and even then the account is opened. That is very important. The suspicious transactions then ignored. So such observations should be separately highlighted and escalated also. Next, high, medium, low risk classification. Let's see how we can do. So high risk observations can potentially lead to what? Financial loss. So medium risk observations are indicated what weaknesses that may become the largest issues if ignored, most of the times operational. So low risk observation generally involve what the procedural improvements or procedural lapses, but that is also need to be see how judgment is necessary. So this classification helps management what allocated their resources effectively in the compliance time. Next, quantification of irregularity. So one of the biggest weakness observed in audit reports is failure to quantify the observations. Means many times the auditor fails to communicate rightly right things at a right time. So that is the bad thing, or that is what I can say are not a qualitative practice. So management wants answers to what is the exposure, what is the financial impact, and what is the potential loss. They are interested in this. So we need to also work on these factors and qualitatively report. That is also very important. So an observation without the quantification often receives what less attention. Okay. So therefore the quantify wherever possible. Next, let's see some of the examples of quantification. So uh, let's see first example, drawing power irregularity. So limit is 5 crore. Eligible drawing power is how much? 3.8 crore and outstanding 4.75 crore. So here exposure how much? 95 lakhs. Next, provision of the shortfall. The required provision is 50 lakhs, but actual provision done 20 lakhs. So shortfall is 30 lakhs. So that's the case. So how management immediately understand the significance when amounts are stated clearly. So instead of saying drawing power not properly calculated, right, what outstanding exceeded eligible drawing power or by 95 lakh. So it highlights also the amount exposure and what is the thing that is also highlighted. So this creates accountability and facilitates what corrective action. So that is very much important. How we draft our audit report in an effective manner is also important. So let's see drafting effective audit comment. So effective audit comment should answer what? Five questions. What happened? What rule was violated? Why did it happens? Then what risks arises after that happen, if it is that happened? So, and then what should be done? Think these are the five things. What happened? What rule was violated? Why did it happen? What risk arises and what should be done? So this structure converts observations into actionable recommendations. Moving further, let's see weak comments versus strong comment. So here weak comment: documentation incomplete. We cannot means this is what only two words are using in a one sentence. Documentation incomplete. Arre, but what? How much and what is the exposure of it? So strong comment will be equitable mortgage documents were not available in file loan accounts, aggregating what? Rupees 3.4 crore. Here quantification is also done in a number of accounts and in a amount also, amount exposure also. So contrary to the bank credit policy. So absence of enforceable security may expose the bank to recovery risk. So branch should obtain and verify the documents immediately. See the 3 to 4 lines para comment. This is what important. So this difference is obvious, and the second statement comment is what? Specific, quantified, risk focused, and also action oriented. What action need to be taken now is also suggested. So this is the standard auditors should strive for. Moving further, common reporting mistakes. Let's understand that also. So audit reports should be factual and professional. Never write like branch staff are careless. Very bad type of drafting. So instead write verification revealed 12 accounts where mandatory KYC review was pending. This is what the essence of the drafting. So report what facts and not your opinions. So maintain objectively it at all times. And as a concurrent auditor, we need to focus on that. We need not be opinion based. Means you have to mold your observations. So it will be come out with a value addition to that person or that official also. That is very important. So avoid what? Vague language, emotional statements, personal criticism, unverified allegations, excessive narration, and repetition. Moving, let's now focus on do's in concurrent audit report, right? So what good reporting demonstrates the professionalism. Every observation should be supported by the evidence. Should not be vague, as I said. Should not be in a air state your statement or anything. Should be evidence based. So every significant irregularity should what indicate the financial impact also. Every report should facilitate your the management action. So an auditor's credibility depends largely on the report quality. So be objective, be evidence-based, quantify observations, highlight the risk, recommend action. That is all very important. Follow up the previous observations, escalate the critical issues immediately. So now moving further, let's understand don'ts in concurrent audit reporting. Okay. So never speculate, never accuse, never exaggerate. If fraud is suspected, then report the facts and indicators rather than the declaring the fraud is happened unless established through appropriate process. Very we need to take care of on this particular part. So balanced reporting enhance what your auditor independence and also reliability. So avoid assumptions, avoid unsupported conclusions, technical jargon, avoid excessive negativity, avoid what reporting without verification, without any discussion, avoid the concealment of critical issues. Very much. And that next, very important part, follow your reporting and closure mechanism. This is also very much important because what happened many times we report and then we move further to the next month and next audit areas, but we don't take follow up of our previous observations or previous things what need to be action taken by the branch management. So track previous observations, compliance status, pending issues, repeat irregularities, if any, aging of the observation. So good concurrent auditor doesn't merely identify the issues, okay? He tracks the closure also. A repeat irregularity often indicates the deeper control weakness. So management should clearly see the new observation, closed observations, long pending observations, still they are coming in every report month by month. This creates what accountability and drives what improvement at branch level also, and you are also improving in your reporting part. So what we can conclude from today's session is what? Remember one important principle: the true value of your concurrent audit is not a detection alone. It is in a communication, how you can communicate or keep with that with a value addition to the particular branch. So an observation that is not reported timely has little value, but an observation that is not a quantified loss significance, even if it is provided on time. So an observation that is not actionable may never be corrected. So therefore, every concurrent auditor should strive to produce what? Reports that are concise, risk-focused, evidence-based, and capable of driving the corrective action. So well-written concurrent audit report acts as what? An early warning system, strengthens the governance, supports the regulatory compliance, and ultimately protects the bank from the financial and reputational losses. So this needs to be taken care of. Thank you so much for patient hearing. Hope you are gaining valuable knowledge from all these updates and video series we are conducting on a tax YouTube channel. So if you have any observations, questions, suggestions, then do let me know via WhatsApp, email, or you can also comment below the video. If you are not yet subscribed to Tax YouTube channel, then do subscribe for Tax YouTube channel for latest updates and video series like this. So stay tuned to the Tax YouTube channel and also share the valuable resource we are sharing. With the sharing of knowledge is very much important. So keep learning, stay tuned. Thank you so much once again. Bye bye. Take care. Hare Krishna.